This conference will now be recorded.
All right. So in the last session, we were talking about accounting document, tables, and then we were about to post one accounting document in which how we are going to update the records in FI and then CO. We will practically check in the today's session. But before we look at the today's session, something that we have taken in the yesterday's class about the assignment. Now, anybody figured out these points? Standard FI reports to check the rent balance. What are the reports that you can check rent balance? Anybody? What kind of reports you can verify? What reports can we use to check rent account balance? FA.
FAGLL03.
Okay. Next. FAGLB03. Okay.
Line item
Where
report
else?
FBL3.
FBL3N. Okay. F.01. In your trial balance, what is the TB transaction code?
Yes underscore PL0 underscore 86000030.
Okay, like that, there are various other reports. In short, if you look at from the FI reporting point of view, there are several reports with which you can look at your rent account balance. It's not that there is only a single report available through which you can see the balance. There are multiple reports. You can use any report depending on the requirement. How you want to see the balance, on what basis you want to look at the figure. Accordingly, you will pick the appropriate report. From any report that you check, you are going to get the same balance. It's not that three different reports will show three different figure. Every report will show the same figure, but in a different way. In a different way, meaning the output, layout, presentation will be different. Similarly, when you're talking about standard CO report to check rent balance at cost center level, what are the standard cost center reports? What reports are there to check the cost center reports, cost center balances?
CS, KS.
No, reports. CS case is a cost center
Okay.
table.
Okay.
You'll have to work on this assignment. Otherwise, I'll leave this blank only. I'm not going to fill up. Because the approach, the understand from everybody is that we are all going to work collectively, and I'll make sure you understand controlling with your existing knowledge itself. And you don't find this is something new and all. What is it? Case?
KSB1N.
Case B1. Case B1N. Yeah. One is the classic report, another one is new report. Any other reports?
ASB5.
There's another report starts from ALR. This is very important.
ALR underscore 870100030, I think.
870 1
10030.
No.
And
Is this correct? I'm also not sure. Let me check. This is here. Accounting, controlling, cost center, actual posting, sorry, information, reports, 870136111. What did I put? 870136111. Let me put this T code. Yeah, this is opening up. This is the one. Any other report?
Case B5.
KSB5. Okay.
AS
All right.
13
KS
13 master
KS1.
data.
No, we are not talking about master reports. We are only talking about the transaction.
Okay. There is one more KSBP.
KSBP. Okay. All right. We will verify these reports once we post the entry now. Next one, FI tables which are updated. Whenever you post any accounting entry, from FI point of view, what tables will get updated? Now here you are talking about cost center. When you're talking about cost center, we are all aware cost center can be assigned only to a GL account, not to customer, not to vendor, not to asset while posting the entry. So you need to be very specific when you're talking about posting. You have to represent table which will record GL line item. What tables will get updated where GL line item is stored from FI point of view?
BSEG.
BKPF, BSEC,
BSEC,
flag and flexa,
BKPF, Pagel, Flexa, correct?
AC Doka.
AC Doka,
SC Doka, correct? Next. It can be correct, it cannot be correct. At the end of the day, we are remembering some table name.
DLT 0.
T001,
Hmm.
DLT 0.
GLT0, yeah. Okay. Any other tables are we missing related to GL?
Lateral flexor T.
Okay. Any other table are we missing related to GL?
SKA1, SKB1 Ajay.
No. SKA1, SKB1, master again. From the transaction, there are two more tables which you should never forget. The way you remember BSEG, BKPF, there are two more tables. These two
BSIS.
tables are common for
BSIS
customer,
and
vendor,
BSIS.
correct. BSIS,
AS.
BSAS. See, what we need to do, we need to understand FI part with the help of our FI understanding, with the help of our FI concept, with the help of our FI logic. We need to make sure the same logic, same understanding, same concept we are applying in controlling, we are able to understand it. Then you don't find controlling difficult anymore. If you are looking at controlling from a new mindset point of view, you will find it is difficult, it is tough. But when you compare it with your FI, with your existing knowledge, you will feel that this most of the content related to controlling you're already aware. Because you will slowly start realizing these things I already know how to post. It is just that you are just adding some minor inputs to here. Majority of the portion you're already aware of it. Okay, CO tables. Anybody found out CO tables? As I said, this is assignment. This is to be fulfilled by you only. If I have to write, I would have written yesterday only. I'm not going to write. I'll write only what you are going to tell. If something is pending, if something is missing in the assignment, you'll have to rework on it. Tell me, then I'll update the sheet. It's more or less kind of you're teaching me half controlling, I am teaching you half controlling. What is it?
CSKS.
CS case is related to table, the master data. We're talking about a transaction.
COSP.
COSP, is this correct?
Yes, sir. Correct.
Okay, any other table?
COSS and COSEP.
What is it?
So COSS.
COSS, okay.
And another one is COEP.
Okay.
CSKS for cost center.
CS case is master data. We are only talking about a transaction. CO transaction table basically, not CO master. Master we already updated in the previous session.
Okay.
Alright.
COSL.
CO?
Yes, sir.
SF.
Yes, L. L, not F.
Z or L?
L, L.
Is it?
L. No, L.
CO?
COS. Yes, L. L, not Z.
Okay. Is that correct?
Yes.
Okay. Alright. So now we updated the basic tables related to the assignment whatever we took in the yesterday's session. Now let us proceed further. Now to proceed further, what we were understanding yesterday, we were halfway done with a GL account posting related to cost center. We assumed that we wanted to post a document to an expense account. We named that there will be a rent expense for 1000 INR. In order to record this rent expense in the rent GL account, we have seen different approaches. Straight away when you try to create it, what kind of errors we are getting? Controlling area is not activated. Okay, number ranges are missing, or different kind of errors we were getting. Profit center not assigned, profit center accounting is not maintained, cost center master is not available. These kind of things we have seen what errors you are getting and what are the prerequisites before you post a CO document. We have seen practically how system is behaving, what is cost element. All these parameters were covered in the yesterday's session. Now next thing what we'll do, let me try to record the accounting entry. I'll take the same line item here. Same example, I'll bring it down. Now you need to pay attention here. When I say you need to pay attention, don't get confused. Most of the times we are confused because when I'm talking about post rent expense for 1000 INR, you are only concerned about rent expense only. Don't look at what is my offsetting account. Don't look at what is my offsetting account. You can take your offsetting any account. Here, if I don't mention anything, the objective, the logic scenario which we're trying to experiment, which we're trying to understand here is posting an entry to a cost center. To post an entry to a cost center, all you require is expense account, expense to be treated as a cost element, cost center is required. That's it. Credit, whatever it is, you're immaterial, you're not bothered about it. When you're testing, don't think too much about credit. I need to put a vendor to my credit, vendor, I have to create a BP and all. Don't go to that extent. These connections you need to understand. What scenario we're trying to focus, to execute that scenario, what information is required, whether you have that information or not, because that is only the supporting data. Without credit you cannot post the entry. You can put any credit, to complete your accounting entry, but have clear focus on your debit, your expense. Cost center, have a clear focus how you are posting it, how reports are coming, how tables are getting updated in CO. If you are able to focus it, you will catch the point. Else what will happen? Why entry is why credit this side, why not this side? You have not mentioned in the example that it is paid by cash, paid by vendor, or paid by bank. Don't think at that level. So to avoid these kind of confusions, I'm clearly writing Others, please be on mute. Post rent expenses 1000 INR. Who's it? Suraj, can you go on mute, please? Okay, I'll put post rent expenses for 1000 INR paid by cash. Okay, meaning the example is telling you what to debit, what to credit clearly. Example is telling us where to debit, where to credit. Now, according to this, your accounting entry will be rent account debit, cash account credit. Your accounting entry will be rent account debit, cash account credit. Debit you are going to put 1000, credit you are going to put 1000. And if you do the total of your debit and credit, it should become 0. If you do a total of debit and credit together, it should become 0. Let me apply a total here. It is becoming 0. Always whenever you're talking about a number, whenever you're looking at a number, try to put number in the comma or accounting format. Try to put the number in comma or accounting format. If you put the number in accounting format, it will be easy for us to understand positive number, negative number. Accordingly, you can easily identify what is debit, what is credit. If you simply put 1000, you don't know which 1000 is positive, which 1000 is negative. In short, what is debit, what is credit, we may get unnecessary confusions which is not at all required. Always try to put like this. Even when you're in the project tomorrow, make a habit of it. Any number that you are looking at it, please make sure that your number is appearing in the accounting format, which will make your life more easier in terms of any reporting, in terms of any reconciliation analysis that you're doing. Sometimes just because of minus sign is missing, your every reconciliation, total calculation logic, everything may be wrong just because minus sign is missing. And we will not be paying attention at that level where the plus sign, minus sign, whether it is there or not there, you may not be able to understand it. Okay, this is here. Now, in order to pass this accounting entry, we need to make sure in real time, when you're in a project where your FI is implemented, where CO is implemented, whenever we talk about FI CO, normally nobody calls FI consultant. Normally, nobody calls FI consultant. Nobody tells I only know FI. Nobody tells I'm only FI consultant. Nobody tells I only know FI. Everybody talks about FICO. Even if you look at the job requirement, everybody will specifically ask, we are looking for FICO consultant. When you're talking about FICO consultant, for an FI consultant, the basic CO is mandatory. For an FI consultant, basic CO is mandatory. Reason, without basic CO, your FI is incomplete. Without basic CO, your FI is incomplete, meaning your basic requirements from the accounting point of view cannot be fulfilled without the basic controlling module. Without basic controlling module, your basic accounting requirements cannot be fulfilled. Reason, you need to capture some expenses, you need to plan some expenses, you need to monitor some expenses, you need to perform some reconciliations, analysis, you need to take some decisions with respect to cost expenses, which is completely part of your CO. When you're talking about CO, you have to split CO into two portions. When I say you need to split CO into two portions, one is your CO for a FICO consultant, another one is a CO for a CO consultant. CO for a FICO consultant, meaning for every FI consultant, for every FICO consultant, basic controlling is mandatory. Without this basic controlling, you will not be able to work on FI. When you talk about this basic controlling, you're talking about cost element, cost center, internal order, profit center. In short, when somebody is talking about CO exclusively, they are exclusively talking about product costing and Copa. They are exclusively talking about product costing and Copa. Only product costing, only Copa is part of CO. Otherwise, your cost element, cost center, internal order, whatsoever you have, profit center accounting, everything is part of FI. When I say everything is part of FI, I mean to say without these components, without this parameter, your accounting document cannot be posted. So far, as part of FI, we have been posting entries to profit center accounting. Now, profit center is created under controlling area. Profit center is created under controlling area. We also understood that no profit center, no accounting entry. We also understood no profit center, no accounting entry, meaning whenever you record any accounting debit, any accounting credit, profit center becomes mandatory. While creating a profit center, if you notice, your profit center is always created at controlling area level. Your profit center is always created at controlling area level, and we are assigning the profit center at company code level. If I go to KE51, your profit center is created at CO area level. CO area is nothing but controlling area. So no other go to complete your accounting entry. You must know what is controlling area, how profit center is created, because without profit center, your accounting is incomplete. So you are forced to understand what is controlling area, how controlling area is created, what is profit center accounting, how profit center is created, how profit center hierarchy is created. These basic fundamentals are mandatory, because without profit center, you are unable to understand, you are unable to meet your accounting requirement. Your accounting requirement cannot be met, cannot be fulfilled without profit center, because in SAP, without profit center, accounting entry is not supposed to be posted. This is the standard basic minimum requirement from every client. So no other go, you need to know basic controlling before you post your first accounting entry in SAP. You are posting your accounting entry without profit center, meaning your entry is not correct. It is not the accounting entry that is used, that is posted in a real environment. If your entry is posted without profit center, I am talking about first accounting entry that you post in your company code. This first point. And another point which we need to understand is whenever you post any expenses, you need to know that where these expenses are spent. When I say you need to know where these expenses are spent, we all talk about in your organization, in your company, there are departments like finance department, HR department, admin department, purchasing department, sales department, marketing department, logistics department, transportation department, research and development department. Everybody talks about these things. We are all aware that these are all nothing but departments. These are all nothing but departments. If you wanted to get any payslip, if you wanted to get any reimbursement, if you wanted to get any the purchasing, or if you wanted to get any kind of a thing, you know that go to finance team, go to admin team, go to HR team, go to procurement team, go to sales team, go to marketing team. You are talking about all these fundamental points. These are all related to departments. These are all departments or functional areas of an organization, meaning all these departments are treated as cost center in SAP. All these departments we will be majoritarily treating as cost center, meaning we know that these are all called as cost center. And you're also aware at this department you are going to spend money. You're all also aware that at this department level you will be spending money. When you're spending money, you're talking about expenses. When I'm talking about you're spending money, there are two portions in it. Point number one, you are spending money, your money is going out. Point number two, you are spending money to receive something, that is your expense. So you are supposed to focus on your spending money, not on money. Your line itself is telling I am spending money. I am spending money. Don't focus on money. Focus on where you are spending this money. Today I say that I spent 100 rupees. I say that today I spent 100 rupees. You are not okay with you spent 100 rupees, it's okay. You are more keen about why you spent 100 rupees. What you did with 100 rupees. Meaning you want me to tell where I spent my 100 rupees. You are expecting me to give the breakup. You are expecting me to give the breakup how I have spent this 100 rupees. This breakup I need to give. Okay, I purchased X product, I purchased Y product, I donated to this person, I gave money to somebody, or something like that I am going to tell. Meaning when I am telling that I have paid something, I have spent something, you are not focusing on how much I spent, you are focusing on where I spent. You are focusing on where I spent. In the similar way, your company is also more focused on where your money is going. Your company is also more focused on where your money is going. Everybody is aware that you are making payment, meaning Money is going out from your bank account, money is going from your cash account, everybody knows, but they are more concerned about where this money is going, how this money is going, who is spending, why they are spending, is it relevant or not relevant. You want to plan it. This is something that you need to plan it. There are some necessary expenses, there are unnecessary expenses also. There are necessary expenses, there are unnecessary expenses. Every company wants to cut down unnecessary expenses. Now within the necessary expense, there is a limit. When I say within the necessary expense, there is a limit. Same product, same service you get for different prices. When you go to the market, if you wanted to buy any product, if you wanted to buy any service, same product, same service is available with a different price tag. You may get it for 100 rupees. Same thing you may get for 10 rupees. Same thing you may get for 50 rupees, 20 rupees, 30 rupees. Depending on the brand, depending on the XYZ factor, same product is available at a different prices. Meaning you know how much you need to spend, what is required, accordingly you need to spend. Now all these things you wanted to analyze, otherwise left and right your money is spent. Otherwise left and right your money is spent, which will directly affect your profit. If your money is spent left and right, your profits are directly affected, your P&L will show less profits or your P&L may show losses. Either you may get less profit or you may get loss if you have no control on your spending, meaning your expenses. Now how do you have control on your expenses? Based on the expense booking. At the time of booking expense only you need to put a control, meaning in your accounting what is going to happen, you are going to record the accounting after the transaction. It's not that I will book rent expense first and then I will pay the rent. It is not going to happen. First you will pay the rent, then you will book the expense. You are going to execute the transaction first and then you are going to do it in your accounting, meaning business transaction is happening first, later on your accounting entry is happening. Here, before your business transaction happens, your user, your client, your organization team members should know what is supposed to be spent, how much you are supposed to spend. Everything will have to be well designed. For you to have this well designing of your expense planning, spending and all, you should have something called budgets. You should have something called budget, meaning when you do not know what is the budget, you will end up spending unlimited amount. You have no control how much to spend. Same thing is with our case also. For example, you want to stay in a rental house. If you want to stay in a rental house, you cannot go and stay in a villa straight away. You cannot go and stay in a 5-star hotel, 3-star hotel. You cannot go to a lodge. You cannot go to any rental house because you are concerned about your budget. When you are spending, you are not just like that going and spending whatever you want. You are also more concerned because you are spending money there. You are conscious about spending your money. Company is even more conscious. Sometimes we will take it, okay, it's okay, leave it. But company will not say it. Company will ask for the justification. Company needs the proper justification, proper reason why you had to spend this much money. Why you had to spend this much money? Because there is a budget. Because there is a budget. Even when you are spending money, you also have a budget. For example, you are earning 30,000 salary per month. You are not going to pay 40,000 per month rent. Why? It is not within your limit. It is not within your budget. Now you are talking about budget. I don't have that much money. My budget is very less. Actually, my salary itself is 30,000. If I pay 40,000 for my rent, how I will survive? Now you're talking about budget. You're talking about planning calculations. Same planning, same budget, same calculation. Company is also doing here. There you are talking about my salary is very less. No, my savings are very less. You are talking about your savings. Company is talking about their profits. If you spend less, you will see the saving. If companies is spending less, they will see the profit. When you are not spending more, you are going to see something called saving. When company is not spending more, they will see something called profit. Simple fundamentals, try to understand, then you can easily relate what is happening. Now the way you have a plan, the way you have the logic before you spend any amount, in the similar way company will also have a plan, company will also have a logic. Company will also have a plan, company will also have a logic. Now companies will also have exception. Companies will also have exception. When you're talking about exception, sometimes you are strict, sometimes you are liberal. When I say sometimes you are strict, sometimes you are liberal, both the times it is your money only. Both the times it is your money. Sometimes you are very strict in spending 1 rupee, sometimes you don't care even if it is 100 rupees. Same thing is with the case of your organization. Sometimes they say no, this expense is not possible. Sometimes companies will tell, okay, you can spend any amount on this. Now it again depends. That is how you have to decide where you have to spend money, where you are not supposed to spend money. Now these basic fundamentals everybody has got in their personal lives. Similarly, every company will have in their organization, which we need to understand. The way you are spending money, it is your personal. The way I am spending my money, it is my personal. The way company is spending its money, it's their personal. So you cannot dictate company, I cannot dictate you, you cannot dictate me, you spend like this only. Because you have no control, there is no rule, there is no regulation. I simply say this is my money, my wish. What is your problem? Similarly, company will also tell the same thing. This is my money, my wish. Who are you to tell me not to spend here, not to spend there, or whatever it is? Every company management takes the decision. If you take any organization, in short, if you take any client tomorrow, once you get a job, once you're in a project, if you look at any client, if you look at any project, every company, every project will work in different ways, meaning you will see different business processes there. Why you will see different business processes? It is according to their business requirement. It is their management decision to spend money like that, or to plan money like that, to control the money like that. No other go, whoever is working in that organization will have to follow the same, because when it is coming from the management decision, when it is coming from the board meeting or board resolution decisions whatsoever, you need to follow it. They will become the corporate guidelines, they will become the corporate rules and regulations, which will have to be followed across the organization. Now all these things are done at the beginning of the year. When you're talking about controlling the money, you need to control at the beginning only. Later on, I cannot put control on the spot. Controls will not work. You cannot control in between, you need to control at the beginning only. Meaning all the controlling points, all the control points, checkpoints, validations, whatsoever you need to have, you need to set up at the beginning only. That is why if you look at your controlling, there is something called budgets. Even if you look at the normal budgets in your finance or whatsoever, everybody will plan the budget at the beginning of the month, or at the beginning of the year, or at the beginning of the day. For example, tomorrow is Saturday, is my weekend or is your weekend. Now you wanted to spend some money, you wanted to go out, enjoy. It's not that after going out you will not think blindly, you will keep spending the money. One fine day or at a moment, you may be exhausted with your money, you don't even have money to come back to your home, meaning you have no planning. When I say you have no planning, you don't know what to spend, how much to spend, where to spend. You started spending money like water. So at one fine point, you reached a place, you reached a situation where you are completely zero. You are completely zero, you don't know what to do. Why these situations are happening? These are happening because you did not plan. Because you did not plan. If you would have planned, you would have understood, okay, I am going out, where I am going, what is available there, and what I need to take from here, how much I need to spend to enjoy there, or to spend my time there, how much money I require. So what you will do, you will accordingly have some basic idea. If you have no idea, you will ask somebody, or at least you will Google it. You will come to know, okay, to go there I need some 5,000. Either you need 5,000 INR, 5,000 your currency, you will need somewhere around 5,000. You will arrange the money 5,000. Accordingly, you are going to plan, okay, when you go there, here this will cost you this much. Make sure that, okay, I am going to spend this much here. Accordingly, you will have a calculation. Accordingly, you will have a calculation. All these calculations are not happening on the spot. All these calculations are not happening on the spot. When these calculations are happening, before you are going there, before you start your journey, before you leave from your home or whatsoever, you are having this calculation. Accordingly, you are prepared. Accordingly, you are arranging money. You are going, because you need to spend money there. Nobody is sponsoring, and you are not a visitor there. You are not a visitor there who is hosting you. Somebody, it is not that kind of thing. Nobody is giving you a treat, nothing. You are going to spend your money. You meaning you need to have your approximate estimated plan. Accordingly, you are going to spend your amount or whatsoever. If this is not there, there is no control. No surprise, anything may happen. No surprise, anything may happen, which companies will not take, because the company will straight away go to losses. Company will straight away go to losses. For you, your friend will be there, somebody will be there to pick you up or to give you money whatsoever, but companies will not have like that. Companies will not do like that, because from your side it's a single activity. From company point of view, there are so many activities happening across different locations. Company cannot actually control. They cannot actually control on the spot. So what they will do, at the beginning of the financial year only, they will put a budget. At the beginning of the financial year only, they will put a budget. Based on the budget, they will plan their expenses. Based on the budget, they will plan their expenses. When they're planning the expenses, they need to plan at some level. At some point, you need to plan your expenses. This planning is always executed at the cost center level. This planning is always executed at cost center level, meaning when you're talking about expenses, I'm talking about rent here. This is my 1000. This is my 1000 rent. Now, when are we actually going to process this rent? Only when you process the rent, meaning before you stay in any house, before you take any house or any office for rent, you will have a discussion with your tenant, your landlord or your owner, stating that okay, we will be staying using your premises for our office purpose or whatsoever. We will be paying you 1000 per month. We will pay you 1000 per month. It is not that you will stay for 1 month. After 1 month, your vendor or your landlord will come. He will say, you pay 1 crore to me, 10,000 to me, 5,000 to me. This is not going to happen, because you will stay there. You will take it on a rental basis only if it meets your budget requirement. Only if it meets your budget requirement, you will take. Otherwise, you will not take. Why? You know what is the amount that you can spend maximum. Again, here, if your budget is 1500, you're not going to spend 1500 there. You're not going to spend 1500 there. Even from the company point of view, they will be asking for the negotiation. When I say negotiation, you're asking for the discount. Any discount is there? Will you reduce the price? We are actually a corporate and we will give you more business. Something like that, you will do the business negotiations. You will bring that amount from 1500 to less. Even if you look at your job opportunities, whenever you say your current salary is X amount, your expected salary is Y amount, your HR knows that what is the maximum budget, but still they are not giving you money, right? Though the budget is 10 lakhs for a particular position, they are not telling that okay, my budget is 10,000, you join, I will give you 10 lakhs per annum. Nobody is telling. Though their budget is 10 lakhs, they are going to tell you our budget is only 7 lakhs. Why? They have to show that they are saving money to the organization. Your HR will have to show that I am saving money. This saving will give them the incentive, or this saving will recognize them. What is the amount that they have saved for the organization? Though they have the budget, they say that no, we don't have this much budget. Maximum we can give you this much only. If you're okay, you join. If not okay, it's okay, no problem. Why these things are happening? Because there is something called budget. They can give you any amount of salary, whatever they want, right? They are not giving from their pocket. They are giving from the company's pocket. Now from the company pocket, they can give any amount, but why they are not giving? Because there are limitations. There are rules and regulations. Fixed amount is already planned for it. For this particular position, if the experience level is between this, maximum amount that we can pay for the candidate is only this much. Beyond that, they cannot go. That does not mean they have to spend the exact amount. It is the maximum amount. When I say it is the maximum amount, that is the least stage where you cannot cross that border. That is the least condition where you can go to that extent. Otherwise, you should not bring the situation where you are consuming full amount. You need to always make sure some amount is saved. For this savings only, everybody is working. Your organization is working for the same purpose. You're also working for the same purpose. For everybody, it is cost. Cost is something that you have to be very careful with. If you're not careful with the cost, you will end up getting losses. If you're not careful with the cost, you will end up getting losses. Same thing is applicable for any organization. That is why they are more concerned, more keen about their controlling or the CO part. Now, when you're talking about CO part, don't think CO is completely different. In CO, as I mentioned, you're talking about CO only when it comes to product costing Copa. Apart from product costing, apart from Copa, whatever is there in CO, there are many things in CO which are other than Copa, other than product costing. All these areas are part of FI. All these areas are part of FI. As a FICO consultant, you must be aware of it. When somebody is asking, don't blindly tell I don't know CO. Don't people blindly tell no, I don't know CO. I've not worked on CO. Meaning, when you're talking about I do not know CO, the other person is thinking you do not even know what is cost center, what is cost element, what is internal order, what is profit center accounting, what is assessment distribution, how cost is distributed, allocated. These basic things also you are not aware. That is why when somebody is asking a CO, you specifically mention, I am not aware or I have not worked on Copa product costing, but on other areas of CO I have already worked. You specify in such a way that you know CO but not product costing a Copa. Don't upfront tell I don't know CO. This also will become a negative point in your interview or in your initial screening call itself. People will tell I don't know anything about CO, I have not worked on CO. The person who is asking you is a HR. Person who is asking you do you know CO is a HR. They do not even know what is CO, what is their inside CO. We upfront tell I don't know CO. They will not shortlist you. First of all, we have no clarity what is CO, what is part of CO, to what extent you need to understand, according to your experience level, what extent you should have knowledge, that also we are properly not aware. So upfront, we only know that I do not know CO, I have not learned CO, I am not confident on CO, you tell that no CO, only FI. There is nothing called only FI, there is only FICO and only CO. There is only FICO, there is only CO, there is nothing called only FI in the market. So forget about FI, you're talking about FICO or only CO. You're talking about either FICO or CO but not FI. There's nothing called FI, there is something called FICO or CO. You don't find any position which shows only FI, because only FI is not possible without CO. You need at least cost center, you need at least profit center. When you do not have a CO, profit center is not created. When there is no profit center, there is no accounting entry. Your basic accounting entry is dependent on CO. Now you will have somebody called a CO consultant in the project, and somebody say that there is a CO requirement, we need a dedicated CO consultant. Now in reality, this CO is a specialized skill. When I say in reality, CO is a specialized skill. These things are called as a specialist. These things are called as a specialist. When we are talking about specialist, specialist is available, specialist is taken only for the implementation time. Specialist is taken only for the implementation time, meaning if a client is implementing product costing, if a client is implementing a Copa, only then they need CO consultant, otherwise they do not need any CO consultant. If a client is implementing Copa, if a client is implementing a product costing, only then they need CO consultant, otherwise they need FICO consultant. Now for example, in the project in an organization, an implementation is going on, the client is implementing product costing a Copa also. What they will do, they will take two consultants. One consultant will take care of a FICO, another consultant will take care of a CO. One consultant will take care of a FICO, another consultant will take care of a CO. Now your project, let's say, is for 1 year, your project is for 6 months, 8 months, whatsoever. Once the project duration is completed, once your implementation is completed, your project has gone live. Your project has gone live. Once the project has gone live, what usually happens in any organization, in any project, is that your CO consultant will be released from the project. Company will not keep CO consultant once the go live is happen. Once the hypercare support is over, majoritarily your CO consultant will be released from the project, because after implementation there is nothing in CO, it's only month end activities. You don't find anything in CO. You just need to execute month end activities. If there are any errors, you'll have to fix it. That's it. Now any organization wants FICO consultant to take care of this CO. This most of the consultants are not aware. Any organization wants your FICO consultant to take care of this, because you are now on the support mode. Because now you are on the support mode, you don't want to pay, you don't want to invest money for two consultants, one for FICO, one for CO. I want somebody who can manage FI and CO. I want somebody who can manage FI and CO. I don't want you to implement my CO. I don't want you to implement product costing. I don't want you to implement my Copa. I've already implemented. I just want you to understand what is implemented, support when there is any problem. If this is also a problem, then nobody can help you. Understanding the existing setup, understanding the existing business process where documentation is already available, Test script is already available, user manual is already available, configuration document is already available, everything is there. Still we say that no, I do not know, I cannot manage, I have not worked on this before. Nobody will say anything. That's why they feel that no, he is not even giving me confidence that at least he will give a try, he will work on it, he is looking for the opportunity to work on CO. We are majoritarily we simply tell I don't know CO, we upfront reject it. Even before the interviewer is rejecting, even before your HR is rejecting, we are only rejecting stating I don't know CO, I don't want your job. Because our answers are like that. Our answers are like that. You have to be very practical. When I say you have to be very practical, your Copa product costing alone is called as a CO. This is not standard. When I say this is not standard, this will not be the same everywhere. Company to company, the requirement will change. Though you work for 10 years on CO, 11th year will be completely fresh for you. Because there is no rule, there is no regulation. You are working based on the company, based on the product, based on their management decision, it will work in a different way. When you realize it, you will understand the reality, then you will not find any difficulty. When you don't realize it, according to you, CO is a moon. You will always see it very closer, but you will not touch it. But when you know the fact, then you will understand what is a CO, how you need to manage it. Right now, in order to post this accounting entry, what you need to understand, basic CO is implemented. It's not like that straight away I can create this accounting entry, not possible. You should have basic CO implemented. When you're talking about basic CO implemented, you're talking about controlling area is created. You're talking about controlling area is created. When you're talking about controlling area is created, it does not mean you are using the full CO. It does not mean you are using full CO. There are many organizations, there are many companies in the market. We usually talk about industries. Manufacturing industry, retailing industry, pharmaceutical industry, service industry, different kind of sectors, industries you will be talking about. Now, when somebody is asking you about have you worked on CO, don't tell no. Tell that yes, you worked on CO, but you have not worked on Copa product costing. This is fine. When you say you have not worked on Copa product costing with a condition that your client is currently not using it. You have not worked because your client is not using it. Don't tell that I have not worked on it because my trainer did not teach me, I did not practice. These cannot be the reasons. Because keep in your mind, you are getting into the market by representing you are a 4-year experienced candidate. You are representing, you have 3 years of experience, 4 years of experience. You have to keep these points in your mind. Whatever you talk in the interview should represent your 4 years of experience. When you are representing your 4 years of experience, tell that you worked on FICO, you worked on 3 implementations, you worked on 2 implementation, 1 implementation. So far you were part of 3 project, 4 project, but none of your client was using Copa product costing. As a result, you did not get any opportunity to work in CO directly. When you say you did not get any opportunity to work in CO directly, you are again specifically representing Copa product costing. You are specifically representing Copa product costing. Again, there is a condition here. When you're talking about Copa product costing, you can exclude product costing from there. You can exclude product costing from there, but Copa you cannot exclude. Copa you cannot exclude. Why you cannot exclude Copa? Any organization which is using or which is having sales. Any organization who is having sales. Now, without sale, there is no organization. Because any organization, the whole objective is to make profit. Profits are possible only when you make sale. Profits are possible only when you make sale. Whenever you are making sale, you need to get profit. Now, these profits are there, these sales are there. These sales are always based on the sales order. These sales are always based on the sales order. We already aware that there is something called FISD integration. You say that you have 3 years of experience, 4 years of experience. According to this, you have worked on FISD integration. You are telling accounting enters everything. COGS account debit, inventory account credit, customer debit, your sales account credit, discounts are there, different other things you are telling. Now, what you are going to do with these accounting entries? What happens after sale? What we are doing with this, what is happening after sale? Again, we need to understand. After sales, you need to understand your profits. After sales, we need to understand the profit. How are we getting the profits? And how do you analyze your profit? When I say how do you analyze your profit, you need to understand, okay, I am making my sales. How do I get my profit? How do I know my profit? When you're talking about profit, first thing that strikes our mind is profit and loss account. When we talk about profit, first thing which will strike our mind is profit and loss account. Remember, profit and loss account is representing operating profit. To operate your business for a particular month, what expenses you have spent, what income you have received, sum of your expenses, sum of your incomes will give you a figure which will be a positive, which will be a negative. This is nothing but your operating profit. This is to include total expenses of your organization, total revenue of your organization. This is nothing but operating profit. This is not your actual profit. Your actual profit is what you're concerned about is, I am dealing with the 10 products. I'm dealing with the 10 products. I am operating my business in 25 locations in India. I have 55 stores in India. From each store, how much profit I am making. From each product, how much profit I am making. From each customer group, how much profit I am making. You may want to analyze your profit at a different levels. You may want to analyze profits at a different level. For example, you are making sales, or you're dealing with some 10 kind of materials you're dealing with, some 10 kind of products you're dealing. Out of 10 products, not every product has got demand in the market. Out of 10 products, not every product has got demand in the market. Some products are fast moving, some products are slow moving, some products have no moving. You would have purchased the product, or you would have manufactured the product today. Some product will be sold out tomorrow only. Some product will be sold out in a week. Some product will be sold out in a month. Some product may take 2 months. Some product may take 3 months. Some products will not move at all. You manufacture today, even after 1 month, there is no sale for it. Even after 2 months, no sale for it. Even after 3 months, no sale for it. It will have some expiry date. For every product, there is something called expiry date. And there is something called provisioning. There is something called stock provisioning. There is something called inventory provisioning. This is common in every organization. When you're talking about stock provisioning, when you're talking about inventory provisioning, every company will have a target. If I am manufacturing a product this month, I need to sell this product within 1 year. I need to sell this product within 6 months. If I'm not able to sell within 1 month, if I'm not able to sell within 6 months or within 1 year, my product will be wasted. I will be getting straightforward loss. I'll be getting straightforward loss. For example, you take any item. For example, you take any edible item, any eatable item. For example, you prepare a cake. You prepare a cake today of 1 kg, and you need to ensure that this cake validity, this cake life is 1 week. If you prepare it on 24th, it has to be consumed within 30th. It is to be consumed within 30th. If you don't sell the cake within 30th, it's a straightforward loss for you. If you are not selling the cake before 30th of May, it will be a straightforward loss for you. Why? Because you are unable to convert your expenses into revenue. You are not able to convert your expense into revenue. If you are unable to convert your expenses into revenues, you will end up getting losses. If you are not able to convert your expenses into revenues on time, when I say on time, everything is completely targeted. You should have targets. If you prepare today, it does not mean that after 3 days I will sell it. Now, if you sell it today itself, you will make some profit. Again, you will make another cake. You will make your profit. You are increasing your profits. Company will always think in a commercial way. Companies will always think from profit making perspective only. Now, if I'm not able to do it, if I'm not able to sell this particular cake within this particular date, it is a loss for me. Now, overall, I may be getting some kind of a profit, but this one particular product, because I'm not able to sell, my total profits percentage will drastically come down, because your cake cost may be 1000 rupees. Your cake cost may be 1000 rupees, but by selling each cake, you may be getting 100 rupees profit or 200 rupees profit. Each cake is costing you 1000 rupees. On each cake, you will be making 100 to 200 rupees profit. Now, assuming that in a week you sold 10 cakes, in a week you sold 10 cakes, on an average, each cake is giving you 200 rupees profit. So 10 kgs multiplied by 200 rupees profit. Now, I'm not writing because I want you to follow what I'm talking. 10 cakes I'm preparing, each cake is giving me 200 rupee profit. 10 into 200, 2000 is my profit for a week. For a particular week, I am making 2000 rupees profit. Now one cake, I could not sell it, which is expired now. The cake expiry date is over. It cannot be eaten now. You cannot eat, you cannot give to anybody because it might cause some health issues because expiry date is over. I could not sell it on time. What I need to do? I cannot show it as a stock. I cannot display cake anymore in my refrigerator because its expiry date is gone. I cannot give it to anybody. If I give it to somebody, it will bounce back on me. Because of your cake, I had health issues. It will bounce back on me. What I'll do? I need to dispose the cake. When I'm disposing the cake, I am disposing my stock. I am disposing my inventory. When you're disposing your inventory, your stock is going out without generating any revenue. It's a straightforward loss. 2000 rupees profit you are able to make. You're talking about 200 rupees profit per cake, 1000 rupees the cost of the sale. Out of 1000, if you take out 200 profit margin, it is still costing you 800. Your total profit is 2000, 800 is gone just like that. Your 2000 profit has drastically come down to 1200. There is a huge difference between 2000 and 1200. Is this the small difference, 2000, 1200, or it's a huge amount? Anybody? Is this a small amount? Profit from 2000 coming down to 1200, just like that. Will you be okay if you are the business owner?
No.
No, sir.
This is something very serious concern. This is something very serious concern because your profit percentage, if you take, it has gone more than 50%. Your profit percentage has come down more than 50%. Even if you take 2050%, it's 500 only, 1000 only, but 800 it has come. It has come down 800 straightforward, which is a huge impact. Now no company wants to do it. Now when you look at any organization like this, one cake we are taking, like that in an organization, how many products are there? In an organization, imagine how many products are there, individually monitoring every product, individually looking at all these kind of things, practically not possible. When I say practically not possible, everything is well planned. When I say everything is well planned, you have different departments, you have different people working at each level to ensure your product is moving. To make sure your product is moving, you are able to make profit, because you may be spending money to manufacture the product or to purchase the product to keep in your stock, and on this money, this is not your own money. Again what you are going to do, you are going to buy it from the vendor. What you will do before you sell a product to the customer, or before you make the product available for the customer, you need to either purchase it or you need to produce it, meaning either you manufacture a product or you purchase a product. For this you need money. This is not your own money. What you will do, you will purchase by taking bank loans, you will purchase by taking bank loans, or you will purchase by taking a credit from the vendor. When I say by taking a credit from the vendor, whenever you purchase from a vendor today, you will have something called payment terms. When I say payment terms, you are purchasing today on 24th May for 1000 rupees. You are not going to pay 1000 rupees to vendor today. You are going to pay 1000 rupees to vendor based on your agreement, maybe after 1 month, after 2 months, after 3 months, after 45 days. Now you are getting interest free product. You are not going to pay anything for this 1 month. Now within this 1 month, you need to make sure you will make revenue. You will convert your expense into revenue within a month. You are able to make revenue within a month. You'll have to think all this perspective. Only then you'll understand CO. If these points are not striking your mind, if you are not thinking about this, straight away I'm showing you the configuration, you will not understand CO. Mark my words, you will not understand CO. You will complete CO training, but you will not understand CO. Completing a CO training is different. Understanding CO is different. If you understand, you don't need any training. If you are able to understand the basic fundamental points, fundamental logic, your understanding, your logical thinking will make you understand everything. Okay. Now your company will see that, okay, I am purchasing from my vendor, I bought so and so item. Now I need to sell within 1 month, I need to make profit, then I'll pay back money to my vendor. Similarly, when you're purchasing from any imports or whatever you're doing, you will go for something called LCs, BGs, letter of credits, bank guarantees you will take, because no company will have money like this. No company will have money. Every company will have liabilities. The way you have the asset, in the similar way, equivalent liability you have. That's why your balance sheet always shows asset is equal to liability. Every company will have liability. Don't think your company liability is only capital. Apart from capital, see what liabilities are there. Meaning you should also see from the finance point of view. Now don't think that liability is always your capital. Don't think again liability is always capital. Only capital is your own liability. When I say capital is your own liability, capital amount is what you have invested in your organization. When you dispose your organization, when you dissolve your organization, when you come out from the company, your investment you will take back. But is it only the capital in the liability? No, right? In your balance sheet, it is not only the capital which is your liability. There are many liabilities. There are many external liabilities, which mean you need to pay to the outsiders. Maybe to your vendors, maybe to banks, maybe other things. Maybe to your employment, your salaries payable, whatsoever. These are all liabilities. How company is managing based on different things, different bank facilities and all. Your organization is managing, your organization is running the show. Now, the whole objective to run the show is to make profit. Profit is only the source for a company to run the show. If there is no profit, there is no show. They have to close the business. Now, to make sure that you are able to make the profit, you should control your cost. When there is no control on the cost, there is no profit. Straight away, as we have discussed, the way cake is expired, your profits from 2002 coming down to 1200, drastic changes will be there. Overnight, you will see miracles are happening. Today, you will find a company, tomorrow, there is no company because there is no proper planning. Tomorrow, company is here, tomorrow, after one day, company is somewhere else because there is a proper planning. All these things you need to properly understand, at least try to understand. Initially, this will not be understood, I agree that, but at least we'll try to understand. At least we'll try to understand so that slowly we will start thinking in a different way. And the way you're thinking, the way you're understanding, the way you're trying to put things, talk to the other person will give you the very huge impact. You will not even believe. The other person will feel that yes, he is the right candidate that I'm looking for. They don't want your CO configuration, they just want your understanding ability, because CO is not having any standards on its own. CO does not have any standard on its own. It can be anything. It can work in any way. Make sure you are flexible enough to understand. Make sure you are flexible enough to understand, because requirement, everything is provided by the client. By discussing with the client, make sure you are able to understand how things are working in the project and how you need to apply the costing techniques, what functionalities are offered by SAP and what are the best practices. By taking simple example, if you are able to manage, and considering our level of experience, nobody will expect that much. Considering your level of experience, nobody will expect that much. Imagine in FI only, there is no huge expectation. Don't consider in CO they want you to an expert. They all want you to manage. At least try to manage. We are there to assist you. We are there to help you. Please try to manage. Everybody is telling, no, I don't know CO. I don't want to come. Because everybody is scared about CO. Everybody is scared about CO because they do not know what exactly is CO, what exactly you need to understand. In CO, more than configuration, your logical thinking, your understanding ability is important. If you're able to think logically, if you're able to understand what they're talking, you can understand, you can work on CO without any difficulty. If this is not the case, no matter how much you practice, how much you configure, you will still stand at the same position where you're standing today. Okay. Now we could have straight away posted it, but without understanding certain points, if you are posting, that will not again make any sense. Because posting to an expense by assigning a cost center, everybody is aware of it. There is nothing new I'm telling you, but you need to understand some basic fundamental parameters with which you will be able to understand what exactly is CO, what we need to understand from it. Now, in order to book this expense, you need to understand any expense that you spend, your company is interested in, where your money is spent, whether you're spending necessarily or you're spending unnecessarily. Whether it is necessary or it is unnecessary, your department head will tell. Your organization, your management will decide. Meaning you have different departments, sales, admin, purchase, whatsoever. In that department, what kind of business operations are carried out? To carry out these business operations, what is the minimum cost? To carry out these business processes, what is the minimum cost? Accordingly, you will have a plan. Meaning, before you post actual, there is something called planned and controlling. So far, as part of FICO, as part of FI, we are straight away posting the entry. So far what we're doing as part of FI, straight away you're posting the entry. But when it comes to CO, when you're looking at the document from the CO perspective, when you're looking at the document from the CO point of view, don't blindly post the entry. In CO, before you come to actual, there is something called plan. In CO, there is something called actual, there is something called plan. Before you do any actual transaction, there is a planned transaction. You will plan it before you go actually into the market. Same thing, even when you spend your money, you will not blindly spend it, right? For example, you want to buy a mobile phone, you want to buy a laptop, you want to travel to some other location, you want to go out and then eat some food. It's not that you will go, you want to eat something, you will place the order and he will bring the food, you will have the food. Later on, you see that, oh, bill is too much, I don't have this much money. You're not going to do it. What you will do, you are going to look at the menu first. In the menu, you're concerned about, okay, I wanted to eat X item. Okay, what is item X cost? Okay, 200 rupees. I have only 150 rupees. Will you order 200 rupees product if you have only 150 rupees? Will you order and buy? You have 150 in your pocket and whatever the item that you wanted to eat is costing 200. Will you buy 200 rupees item when you have 150? Yes, no?
No.
No.
Why?
No budget.
You can also check what is your available money after eating, after getting the bill also, right? But why you are looking at the bill,
Budget.
why you are looking at the product value even before you eat?
Budget.
Because this will put you in trouble, right? After eating, if you see, if you don't have sufficient fund, sufficient money with you, you will be at a risk, you will be at a trouble. Agree? Yes or no? Now, will you be okay to take this risk? So what you will do, you will see, okay, now that is called your plan. You have 200 rupees or you have 150 rupees in your budget or in your hand. You wanted to eat something. You are going to look at what is the amount, that is your plan. Meaning maximum amount that you can spend is only 150. Maximum amount you can spend is 150. If you have only 150 rupees, are you going to a hotel, restaurant? Are you going to eat total amount 150 rupees, paisa vasool? Yes, no? Are you going to do the
No.
same thing? Why?
No.
You'll not eat
If
full
there is
150
any
rupees, right?
Yes.
Because after eating, you may need something else, or you may have to go back. You may need to go by taxi, you may need to go by auto, or you may need to put fuel, or you may need to recharge mobile, anything. There may be something. This is the maximum amount, meaning this is the available amount. It's not that, assuming that this 150 rupees you allocated only for food. Okay, today's food. I'll say food for 24 May. Since we are talking about plan, let us be very specific. To eat food today, your budget is 150 rupees. Does it mean breakfast alone you will eat for 150 rupees? What about your lunch and dinner? Now this 150 rupees you need to plan the whole day. Agree? You need to have breakfast, you need to have lunch, you need to have dinner. Accordingly, you need to split, meaning you need to compromise on certain areas. If you are not compromising, if you are spending 150 rupees for breakfast, there is no money left for lunch, there is no money left for dinner. Why? You have spent the total amount. Similarly, any organization, before they spend actual money, here you are not directly spending 150 rupees. Before spending 150 rupees, are you looking at your available amount or not? Yes, no? Before spending this 150 rupees, are we looking the available amount or not?
Yes. Yes.
You are looking at your available amount. This available amount, are you spending it completely or not?
No.
You're not spending it completely. You will limit it, because you know the further expense you also need to have. You need to save some money for the further expense, meaning whole day you need to manage. This is only the breakfast time, this is only the lunch time. I need to manage for my dinner also. I'm not going to spend 150. Accordingly, I'll plan. Maybe I'll spend only 50 rupees. Now in the similar way, whenever any organization is processing or spending any amount, there is something called plan. There is something called plan. They will first create a plan in the cost center. When you record the cost center planning, based on the cost center planning, you are going to book the cost center actual. And then you are going to do the comparison. Your cost is always compared. When there is no comparison, there is no point of CO. You are coming into CO, you are taking cost center just to have this comparison. When there is no point of this comparison, can't you get 50 rupees from FI? Will your FI report not show 50 rupees in your GL? Yes or no? Can we see 50 rupees whatever you spent from FI report or not? FHELL 03
Yes.
TBPNL, will it show your expense or not at cost center level?
Yes.
Then why you
It
are
will show.
specifically again assigning a cost center whatever you can get from FI? In FI there is something called planning missing. You cannot plan, you cannot distribute the cost and all from the FI point of view. That is why you are using a tool called cost center, meaning cost center you are not only using to update the expense account by creating a cost element and all, you are doing something else with cost center. We are doing something else with cost center. This is something else is what you need to understand from the cost center. That something else is what is all about your cost center accounting. This is all about your CO. And what you can do before you post any expense, I need to know what is my planned cost. Now let me show one report. If I look at this report, this is where we have listed CO standard report. There is something called this report, and this is very important report. If you are talking about cost center, you must know this report. Without this report, you are not supposed to talk about cost center. Forget cost center accounting if you don't know this report. Forget about cost center if you do not know this report. Enter. Actual, plan, variance. If you do not know this report, if you do not know this report T code, if you do not know how this report works, forget about cost center accounting. It is as simple as like you do not know cost center accounting if you do not know this single report. Now what I'll do, I'll look at my controlling area. Controlling area is what? AJCL. Enter. Fiscal year 2024. I wanted to look at my cost from current month, May to May, 5 to 5, version 0. Now why this version 0? Whenever you pull any report, if I look at any report, FAGLL 03, FAGLL 03. If I look at any report, normally what we are all doing while generating any report, we are giving a company code, we are giving GL account, and then we are executing the data. For example, if I put company code, if I give any GL account, execute, let's see what output we will get. You are getting some report, you are getting some amount, but this amount is coming from a leading ledger, but you did not specify anywhere that I want data from leading ledger. But how system is picking only from the leading ledger, though you have not mentioned anything? Because in SAP there is something called default ledger, standard ledger, which is represented as leading ledger 0L. All the accounting, all the transactions in FI will be recorded with respect to leading ledger, which is default. You have no control over leading ledger. If you wanted to control anything, please create a non-leading ledger, do whatever you want there, but not in control, not in leading ledger. Leading ledger, strictly you need to follow SAP standard functionalities, SAP standard instruction. You cannot play with leading ledger. Similarly, when it comes to CO, whenever you generate any CO report, the way you have a standard ledger, there is a standard version which is nothing but 0. There is a standard version which is nothing but 0. It is more or less similar to ledger. Leading ledger, standard version 0L 0. There you can create a non-leading ledger for additional reporting requirement. Here you can create additional version for your reporting requirement. The way you are creating non-leading ledger, in the similar way you are creating the additional versions for your planning purpose. Now here system is by default taking 0, and in your report, if you scroll down, I'm not sure how many noticed, by default it will take 0L here. By default, your any report that you generate in FI, by default it reads the data from leading ledger 0L. If you want from non-leading ledger, you need to manually come, click on this icon called choose ledger, put your non-leading ledger. Else it is going to generate the data. It is going to generate the data strictly from the leading ledger. Don't think that I'm not giving any ledger. Whenever I pull the company code GL account, data is coming. Understand from where data is coming. Data is coming from where data is coming. It is coming from the leading ledger. By default, your data is always executed from leading ledger. If you want from the non-leading ledger, you need to create non-leading ledger, which is optional based on your reporting requirement. Similarly, in CO, data is coming by default from the standard version 0. If you have any other different planning requirement, create additional plans. Create additional plan versions like 0. You can create any single digit version. At that level, you create your planning and you can pull the data from there. Now, if I look at it, the way you are looking at the GL report, for generating any GL report, GL account is sufficient. For generating any GL report, GL account company code is sufficient. Similarly, to generate any cost center report, you need to give cost center or cost element. Cost center is mandatory here because this report is talking about cost center. Cost center report, cost center is mandatory. Cost center report, cost center must be there. When there is no cost center, there is no cost center report. Similarly, when you talk about GL report, when there is no GL account, this is not called as a GL report. Similarly, when you talk about cost center, you need to make sure cost centers are created. You can create the report or you can pull the report for cost center either at a cost center level or at the cost center group level. You can pull the report either at the cost center level or at the cost center group level. Now slowly we will understand what is cost center, what is cost center group, how you can analyze it. Similarly, there is something called cost element group, meaning you can pull the report for an individual expense or for a set of expenses or for a group of expenses where you are combining certain expenses into a cost element group. When I pull this report by giving my controlling area, click on execute. Let's see what you are going to get here. So far, nothing is recorded in FI. Sorry, nothing is recorded in your cost center, your controlling area. You are not expecting anything. It is giving report contains no data. Check the selection log. It is telling report contains no data. Okay, let me go back. I'll try to give different report. I'll try to give different controlling area. Let's say LEIN. Let me try to execute. I just wanted to show how output looks like. Accordingly, we will proceed with our transaction. Now there is something called this. Some output has come in your cost center output. There is something called cost element. Cost element is nothing but a GL account. This is your rent GL account. In this, there is something called actual cost. There is something called planned cost. There is something called variance and variance percentage. This is the whole objective of creating a cost center. This is the whole objective of planning your cost. If you don't need this, if you don't have the planning, you can see the report from the FI also. If you go to FHGLL 03, you can see 166.67. There's no point you come to costing report. There's no point you're looking at the cost center report. You can get this from your FI also. But why we are coming here? Because at the cost center level, using the controlling module, you can do the planning. I can do the planning. I can compare what is my planned cost, what is my actual cost, what is the difference. Difference is nothing but variance. What is the variance that I am getting? Is my variance positive or negative? Meaning, is the variance favorable or unfavorable? For example, I have not planned anything, but I ended up spending 166. Is it a good variance or a bad variance? I have not planned any cost, but I ended up spending something. Is it good for me or not good for me?
Not good.
Not good.
This is not good because I have not planned any cost. This is unplanned cost. This is not at all good because you have not planned that you are going to spend 166 today, but you ended up spending it. Now definitely there will be some variances. Without variance, nothing will be there. Definitely there will be variances, but you should anticipate why variance is coming, why there is a difference. There is something wrong in your planning. Why did you not plan properly? This will teach you a lesson. This will teach you a lesson. This will make you understand. Going forward, you will consider different factors before you spend anything. That is how anybody will understand. You will make some mistakes. From our mistakes, we will understand, okay, these points we missed out this year. Next year, we will ensure all these things we will include while preparing the planning. Accordingly, you'll make sure next year we will do it. Because currently there is nothing. Nothing is left with you. You cannot do it. Now, when you plan it, you will know that, okay, I have planned 200 rupees. I spent 166. Okay, my planned is more, my actual is less. Or the other way around. My planned is more, my actual is less. or my planned is less, my actual is more. Any combination is possible. One can be more, one can be less. If I talk about this, situation 1, my plan is 150, actual is 50. Okay, situation number 2, my actual is 200, my plan is still 150. Actual is 200, my plan is still this one. In both the cases, there is something called variance. Variance, don't get confused with the terminologies. We are all aware of this terminologies in a different way. Everybody knows that difference. What is the difference? The difference from accounting is represented as variance from costing. Whatever the difference you are calling from the accounting point, the same difference from the accounting you are representing as a variance from the costing. In this situation, what is the difference? What is the difference between actual and plan?
100.
100. In this situation, what is the difference?
Minus 50.
50.
Minus 50.
This is 50. For time being, let us not put any number, plus or minus, or to make it a little clear, let's say I'll put 100 here. I'll put 100 here. In this case, both the situations are having 50 difference. Agree? Correct? In this situation, in both the cases, is my difference 50 only? Agree?
Yes.
Yes, sir.
But one is benefit for me, one is loss for me. Is that also correct? 150
Yes.
is doing benefit for me, 150 is not doing benefit for me. One is increasing my profit, one is reducing my profit. Yes or no?
Yes. Yes.
Now, meaning one variance is favorable,
First one, Ajay. First one is favorable, second one is unfavorable.
unfavorable, or you also call it as adverse. So one is favorable variance, another one is unfavorable variance, meaning one difference is good for you, another difference is not good for you. Meaning you are expecting one difference, you are not expecting another difference. But in both the cases, there is a difference of 50 only. One is good, one is not good. Now, how you can identify only when I know plus minus symbol? Now, your plus minus symbol has any value or not here? Is this plus minus having any impact or not from the accounting by looking at this now?
Yes.
Yes, sir.
If I don't put any plus minus symbol here, will you be able to take a decision?
No.
We may get, we may get diverted, or we may get manipulated. Agree?
Yes.
Now I
Yes,
need
sir.
to look at which variance is good for me, which variance is not good for me. For me to analyze it, I need to make sure how this is representing. Now let us not go to report, let us see it from here itself. Now your actual, you're talking all about cost. Cost will show debit balance or credit balance. Cost is your expense. According to your nominal account, cost is what? Debit or credit?
Debit.
Debit.
According to a nominal account, cost is debit. Debit is positive or negative?
Negative.
Positive.
Negative.
Debit
Positive.
is
Positive.
positive. So I'll put positive only. So to avoid this confusion, you need to put this in always accounting format. To avoid these differences, always put the numbers in the accounting format. Even though if you are getting confused, system will alert you, no, you are wrong. This is negative, this is positive. Okay, put everything in the accounting format. Now to identify the difference, now again I'll put same thing, variance. Again I'll put same thing called variance. This time I'm going to calculate based on the formula. Manually when I calculated a difference 100, 150, 50, 200, 150, 50. But you are not sure whether to deduct 100 from 150 or to deduct 150 from 100. Correct? Now there is again a question mark. Is it A minus P or P minus A? Is this valid point?
P minus A, Ajay. Plan.
Right?
Suppose our plan Plant value more than it's a negative, unfavorable. P minus A, Ajay.
Now what I'll do, I'll try to, now according to us, this is a positive or negative, this is good or bad? First one.
Yeah, favorable, Ajay. Positive.
First one is good. Now since first one is good, I'll put blue color. Second one is not good, I'll put red color. This is not good for us. Now let me try to put formula actual minus planned. Actual 150, planned is 100. I am getting negative 50. So minus 50, is it a good or not good?
This is a credit. It's a profit as per the accounting.
This is credit. Okay. Now the second one, if I try to put the same formula, actual minus this one. Now let me add one more point here. I'll put variance again. Then we'll remove one variance. We'll keep the actual variance which we need to remember. But before that, let us have all the possible confusions. Then we'll come to a conclusion. Now here I'll do the other way around. I'll do from planned actual. Now here also I'll do from plan actual. Now these are reversed now. Number is the same, but plus minus symbols are getting changed or not? They're getting interchanged.
Yes.
Right. Now there's always a point of question mark when it comes to controlling, because there is no debit credits here. Controlling will not work based on your accounting, debit, credit and all. Here it works in a different concept. Now to see this, let me show you this. Now this one I am looking at for period number 5. LEIN is this one. Execute this. And for this cost center, there is a value of 166.67. Now if I try to put 200, now actual is this. Same thing, I'll put another number here, whatever is there. With the help of it, we'll try to understand. Actual is currently 166.67. Now if I try to put my plan 200, you will get some variance. Let's say 200 minus this, whatever the variance is, 33. This 33 we will understand whether it is plus or minus. According to our logic, this 33 should come plus or minus, because both are possible. Now quickly I'll do a plan for it. I'll go to, but I'll not be able to do it because I need to create number ranges for it. Otherwise I'll not be able to do it. But let me try if I can do it, so that in one go all the confusions will disappear. You will have a clear understanding how it is working. Five to 5, 20. But before this, what is this controlling area? LEIN 2024. Ignore what I am doing as of now. LEIN underscore CC1. 421 401 421. So I'll put 200 here. Now this is done. Let me come here. I'll go back. Currently there is nothing here. There is nothing called planned. Let me come out. Let me pull the report again. Now you can see planned cost is updated as 200. Difference is coming 33.33 negative. So it is bringing 33.33 negative. Now to bring 33.33 negative here, should I do actual minus plan or plan minus actual?
Actual minus plan.
Actual minus plan. I am getting 33.33. I am getting 33.33. So how SAP is working to calculate the variance? What is the formula? Is it actual minus plan or is it plan minus actual?
Actual minus plan.
Plan minus actual.
Actual minus plan.
Look at this number.
SAP works
It's plan minus actual.
Plan minus actual.
Okay, look at this number. My actual cost is 166. My planned cost is 200. System is telling there is a variance of 33.33. This is a negative variance. This is a minus figure. Now, this is my minus number. This is my minus number where I did A minus B. Similarly, if I try to put the same number again, here I will do P minus A. This is positive, P minus A. Now, which one I need to consider when somebody is asking you how variance is calculated in SAP? Is your answer actual minus plan or plan minus actual?
Actual minus plan.
Plan minus actual.
Plan minus actual.
Now, there is a screen in front of you. I'm not trying to do any manipulation. I'm not trying to tune anyone's mind. SAP is in front of you. Excel is in front of you. Look at SAP. Look at your Excel sheet. Understand how SAP is working. Accordingly, you need to remember the logics. Sometimes our logics may not be exactly the same with SAP. SAP may be working with a different approach. Since you are working in SAP, you are trying to understand how SAP CO is working. Understand how system is behaving, how system is working. Hold that point. Both numbers are here, but you can do either this way or the other way. But how SAP is working? SAP is telling 33.33 negative is the variance. To get the negative variance, you'll have to deduct your actual minus planned. Okay, so this is your formula.
So Ajay, what will happen to the end balance, like if the balance is minus 33.33, right? As we do in the finance, we balance carry forward, right? So do you do that in the same the costing too?
No. This nothing will happen to it. This is only used to understand how much you are overall spending. You want to know whether your spendings are within the limits or not. So nothing will happen to this variance. This is only for your information purpose, for the comparison.
Okay. So
because if you're spending more than what you're supposed to spend, you'll have to give a justification why you could not complete your expenses within the planned value. System will not stop you anywhere. You can still post more than 200. That is also possible, but your performance is measured based on the variance.
No, like my question is like if the year end, if the balance is left with the planned cost, right? So what that planned cost amount will be done, like to close, nothing is done, or it will be left?
If you have more, if your actual is more, then you are going to settle the variance.
If your
whatever the variance, if it is less, you don't settle it. If it is more, you are going to settle the variance because your actual cost is more.
Yeah.
It is like you have 200 rupees, you spent 166 rupees. Now the 30 rupees, you don't need to answer to anybody, right? It's your saving.
Okay.
If it is 200 rupees, you spent 250 rupees. Now you need another 50 rupees. You need to gather the money 50 again.
Okay.
Okay. So if you are getting only for the information, and these variances are helpful when you are working on the product costing. When you are working on the product costing, you will be getting the variance and you will be settling the variances in the product costing. But before we go to that level, slowly we need to understand how variances are calculated by SAP and what we will do this variance, what is favorable, what is unfavorable. Now in our example, this 33 is favorable or unfavorable?
Favorable.
It's,
Favorable, Ajay.
This is
Ajay, can you hear me?
Within no, Ajay, within the planning, whatever the expenses happen, that is a favorable one.
Favorable.
Suppose going beyond the that is negative.
Correct. Now this 33 is
That
your
means we should,
favorable.
that means
No.
we should understand the plus means unfavorable, no, Ajay, as per the SAP settings.
Correct. So favorable is equal to negative variance. Agree? Is this a statement correct now?
Yes.
yes, Ajay.
Favorable means negative variance. If I'm talking about unfavorable adverse, this means what variance? Positive or negative?
Positive.
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 Positive variance. Now these points slowly we need to understand. It's not that all of a sudden overnight we will understand. It takes a little time because these are all new to us. Everybody is new to all this terminology, functionality. We need to accordingly have a little more patience to understand, and that is the reason I said there are a lot of prerequisites. If you are not even aware of these things, forget about product costing. Somebody will say that cost center accounting is part of basic FI. Agree with me? Every FICO consultant should be aware of cost center or not?
Yes.
Yes, Ajay.
Yes.
Right? If I ask a basic fundamental question, how your cost center will show variance? Can I say I do not know? Is it a valid answer if I say I do not know?
No, Ajay, we can't say.
We cannot say, right? But what we all will do, we all will think controlling is only product costing, only Copa. Those are very small things. When I say those are only small things, those are receiving the data majoritarily out of CO. Controlling product costing, controlling profitability analysis are dependent on other modules to collect the data. But apart from that, whatever the other things are there, those are straight away connected to your FI. So you must know these fundamentals. These fundamentals will make you understand anything in an easier way. When I say anything in an easier way, you try looking at your CO. If you're working, if any of you are working, look at with this concept, look at with these fundamental logics, you will slowly understand what is happening. Whatever is your confusion today will become a clarification tomorrow. Meaning we are trying to get ourselves confused, we are trying to put different questions to ourselves, and we are trying to understand, yes, this is what it works. Tomorrow when somebody is trying to create confusion, will you get confused now? When somebody is telling variance is this or that, now will you be confused, or you will be able to talk confidently?
We can speak, Ajay. Why?
Right now you can talk confidently. You have seen how system is working. You can ask them, if you have any doubt, open your system and then see this is how SAP works. If this confidence is not there, when somebody is telling no, it is this, no, it is this, according to their logic they may be thinking this, according to your logic this may be thinking this. When there are two different of opinions, there should be a conclusion whether your opinion is correct, my opinion is correct. We are not here to judge anybody, we are only supposed to give justification. Give your justification according to you, why you are telling this is variance positive, why you are telling this variance is negative, and see and explain everything from SAP point of view, because you are referring SAP controlling. Keep in your mind you are considering SAP point of view, accordingly you are aligning your understanding. If there is any difference of understanding at this moment after looking at SAP, okay, in SAP this is how things are working, accordingly I need to understand. Tomorrow when you're working in any project, when you're solving any problem, when you're trying to look at any issue, when you're trying to get any understanding, when you're trying to propose any solution to the client, your explanation, your understanding, your proposal, your analysis, everything is in line with SAP. You cannot say that, oh sorry, my understanding is wrong, SAP is working the other way around. So that should not be the case. In the similar way, when somebody is talking, nobody will mention debit credit. In the costing, nobody will mention debit credit. They talk overhead, they talk variance, different terminologies they will be using. It is initially tricky to understand, tricky to get familiar with. Once we are familiar with those things, you will not find any difficulty on any CO topic. Okay, so what I want everybody to do now, we have not yet posted any accounting entry. We are yet to post the accounting entry, but before posting the accounting entry, numbers, whatever we are talking, we need to understand. And here, what you do, you work on the same logic. Put a table, actual, plan, variance. Put a table, put cost center, variance calculation. Put actual cost, planned cost, variance. Put some 3-4 expenses. When I say 3-4 expenses, put expense name, rent, administration cost, or whatsoever. Take any 2 or 3 expenses, put some planned cost, put some actual cost. Make sure some cost will give you positive difference, some cost will give you negative difference, and you have a justification, you have a clear understanding why positive difference is coming, why negative difference is coming, which is favorable, which is unfavorable or adverse. And once we start posting the entry, before posting the actual transaction, we will first post the planned transaction. We will see how planned value is updated in cost center, how planned values can be verified from the reporting. When you are posting the actual entry in the cost center, how actual entry can be verified and how you can compare actual versus plan. What is your manual calculation of variance? What is SAP calculation of variance? Is our understanding in line with SAP or not? We will verify in the next controlling session, so that we will have a clarity, meaning from the base, how data is getting entered in CO, how records are getting updated in CO, practically we are able to relate it. Later on, when we talk about the business scenarios, it is straightforward. You put XYZ configuration, 1, 2, 3 will start working. When you put XYZ config, 1, 2, 3 will start working, but why XYZ, why 1, 2, 3, you need different kind of understanding with the help of FI. All right.
Ajay,
So, yeah.
sorry to ask, this interview session, is it for batch 5 or which
No, no,
batch?
this is common for everybody. This is not specific to any batch. This is generalized session, common for everybody.
Okay. Because in batch 5, we've not done this actual planning variance stuff, but I know you've done the setting. That's what I'm asking.
No, this is not part of your regular batch. This is common for every batch. This is general common understanding for everybody, not specific to a particular batch.
Okay.
Okay.
Can
All right,
I
fine
share?
then. So I'll share
Hello, sir.
this.
As hello, sir. As we have a positive variance and negative variance, can't we just transfer the unfavorable cost to unfavorable cost so that the unfavorable cost will null out?
No, that is part of your allocations that we will come later on. That is something called allocations. You have planned cost allocation, you have actual cost allocation, wherein you can distribute the cost between the cost object. So that we will come later on. All right, fine then. The remaining questions and all I'll take later on. Okay, I'll share this Excel sheet and then the recording. Make sure you follow it. Understand with your basic understanding, meaning take 1 or 2 simple examples, put planned cost, actual cost, calculate variance. Be very clear with how variances are calculating, what is favorable, what is adverse, in which situation you're calling this. Have a clear clarity without having any confusion. If these confusions are there, you will not be able to understand Copa product costing. Straight away, it will be a bouncer, because there it's all about number, plus minus variance, this that and all crazy variances will come there, different numbers will play left and right. So you need to understand how value is moving, cost is flowing. For you to understand cost to flow, cost to movement, basic fundamentals, you should not have any confusion. Same logic, same fundamental you will be using in Copa also, in product costing also, but with a different context. This is the base. Fine then, so we'll continue in the next session again. Good night.
Sir, could you please share the fourth